Hello and welcome. You're watching us here on Halftime Report, the first one of the new year 2023. So from our team to you and your family, a very happy new year. I'm Manglam Malu, with me Sonal Budra. Sonal, looks like a good start to the new year. The Nifty actually opened mildly lower and thereafter we've seen gains build up. The mid-caps and the Nifty Bank outperforming. The market breadth also not particularly bad, almost 2,100 stocks in the green.
Oh yes, they are. And we are like almost at the day's high, right? And across the board, we are seeing gains coming in, except for healthcare and IT. So those two sectors continue to remain under pressure. A lot of exuberance is what we are seeing in the mid-caps as well. And infra stocks, for instance, NCC, look at that. That stock is up 8%. IRB Infra is the other one. That stock is higher in trade to the tune of around 7-odd%. Metal stocks, again, the top gainers today. So across the board, there is buying that we are seeing in these metal names, and the fact that analysts think that these prices have bottomed out. So, of course, a lot to track. But let's get started with the first corporate on our show. Shalby is the company that I'm talking about. Shanay Shah, the president of the company, is joining us now to discuss the demand trends, the occupancy trends, and the outlook going forward as well. Shanay, good afternoon. Thank you so much for joining us, and Happy New Year to you as well. The first question, of course, is what is the outlook 2023, and what kind of occupancies did you see in Q3 versus Q2? Do you expect them to improve in the coming quarters as well?
Yeah, good afternoon, and thank you for having me. Wishing you and all your viewers a very happy new year as well. I would like to share that we've just completed 5 years of listing in December, and we basically have nearly doubled our revenues, doubled our occupancy, doubled our the numbers that we've been doing across all the different businesses, and we are quite happy with the operational performances of the business. When we talk about Q3, yes, there has been an uptick because of course October is usually a festive month. So we have Diwali, Dussehra, etc. So that month usually in the whole year is a little bleak. But November and December have been very promising and have more than made up for the kind of October.
So on a blended basis, what kind of occupancies can we expect in the third quarter? Will they be closer to the 50% that you did in the second quarter, or will there be a mild slip?
No, we can expect a similar trend, and we will be going and we can kind of extrapolate the numbers of the Q1, Q2.
And would you say the same of your average revenue per occupied bed? I mean, in the previous quarter that you had, the numbers were close to around 33,500. Is this going to increase, or is this going to be stable in the third quarter?
So, if you look at the trend has been upwards for us because, the arthroplasty surgeries that we've been doing, we will be doing close to 15,000 arthroplasty orthopedic surgeries in this year, which is a very high ARPOB business for us. So basically, that is driving the ARPOB up this year. So we are seeing that, we are looking at the average of this year about between 33 and 35,000, which usually used to be in the 28 to 30,000 kind of mark earlier.
Okay. So some improvement there. I wanted to talk to you about your international tourism as well, medical tourism that is. Usually in the month of December, we do see an uptick here. Has that been the case for you? Because you've already seen a 3x increase in international medical tourism in Q2. Will you be doing better than that in the second half?
Yes. So, usually the months of between October to March is usually the NRI season for India, especially in this part of the world in West. So, basically we will see a lot of international medical tourism because it is the best time to visit India as well. And they also have the Christmas holidays, etc. So usually we see the numbers in the second half a lot higher than the first half of the year. So we are definitely expecting that. Internationally, we're doing a lot of different things. So we have, an arm called Shalby Academy. We've partnered very recently with an Australian-based online academy where, we will be imparting online skills for clinical staff, which will be, for the paramedics like nurses and technicians, etc.
Okay.
Right.
So right now, international medical tourism is very small part for you, right? The last known number was 2.1 crores. That is in Q2. What would the quarterly run rate look like? Will you be able to increase this pie coming in from international medical tourism?
Yeah, so, looking at the geographical locations where we are present, there is limited demand, for medical tourism. compared to metros like Delhi or a Bombay or a Chennai. Having said that, given the locations we are present, we do the highest amount of medical tourism work in these cities. And that's because of the kind of work that we've done in the last 20 years, the capabilities we've built. So yes, we are looking to do about 15 odd crores in the next 12 months for the next 12 months.
15 crores for the next 12 months. That's from international medical tourism, you're saying?
Yeah, that's
okay.
All right. Shanay, it's interesting. You said that you completed 5 years of listing and all your financial parameters have doubled. But what the street cares most about is the kind of returns that you would have delivered to your shareholders. And that hasn't really been, great to say the least, because we have seen a decline of almost 40% from the issue price of 248 odd rupees. And even post-listing, had someone bought, they would be sitting on cuts of almost 30-35% of their capital over 5 years. What the street really wants to know from you while your business improves, etc., is the pace at which you can expand and deliver on, shareholder returns, etc., as well. I mean, what is your outlook with regards to your knee and hip manufacturing, implant manufacturing business? You had guided for 600 to 700 crores coming in terms of revenues there. You also said you were looking at acquisitions in Delhi and Kolkata. You said you were looking to add, hospitals via the franchise route. Can you give us some more color on all of that?
Oh, sure. So, as I said, we have doubled our revenues in the last 5 years. Our EBITDA has doubled. Our ROCs, which used to be higher single digits, for the hospital business, because of the expansion, have now come back to between 16 to 20%, depending on the quarter. So we are very happy with that operational metrics. The implant business is a young business. It's about 18 months old right now. In the first calendar year, we did about 35 odd crores of revenue in the business in the first full year. And in this year, in the first half itself, we have done more than 50 crores. So with that run rate, you can expect between 90 to 100 crores of business this year. And yes, the 5-year target from now is to go to about 600-700 crore kind of top line, because a lot of resources, are being spent on that business. The other one is, of course, the franchisee business, where we are already operational in Ahmedabad, in Lucknow, and in Udaipur. And, we will be starting Gwalior very soon. And we have already shortlisted 30 cities where, we are expecting franchisees to come up over the next 3 to 5 years. So that is, again, going to be one big business. Coming back to the hospital business for a second, we, at the current occupancy level, which, you mentioned, we are... without adding any more capex, we can still double our revenues over the next 3 to 5 years. And, that will bring in more than 25-30% kind of ROCs in the hospital business.
Okay, all right, Shanay. Thank you so much for joining us and taking time to discuss what the outlook for 2023 is and how Q3 has been. It was a pleasure speaking with you. We'll slip into a short break on that note. On the other side,